Bitcoin took a little dip lately, but according to analyst Rekt Capital, it's just a small bump in the road. He says, we're still cruising through the banana zone, that wild ride where Bitcoin tends to skyrocket. Corrections like this? Totally normal. He compares it to 2017 and 2013. Both had choppy moves before blasting to new highs. Right now, BTC is just catching its breath. Rekt Capital believes once this phase wraps up, we'll see a fresh surge, followed by another small dip, and then, boom, a final push to a new all-time high. The bull run isn't over, it's just taking a coffee break. A top exec at VanEck says Bitcoin could shoot up to $180,000 by late 2025. That's a 423% jump. Sounds wild? He's basing it on past Bitcoin cycles, and he thinks the pattern's lining up again. But first, Bitcoin has to survive this messy macroeconomic moment. The good news? Big money investors are finally picking up the phone. Calls about Bitcoin ETFs have jumped 300% thanks to growing confidence and some political shifts. Looking further ahead, he says if Bitcoin grabs the same market share as gold's speculative hemp, it could hit $450,000 in a few years. So yeah, BTC might be gearing up for a serious glow-up. Morgan Stanley says the worst might be over for the stock market. After the S&P 500 dipped below 5,000, their strategist Mike Wilson thinks we hit capitulation. That's finance talk for when everyone panics and sells, usually right before things turn around. He compares it to a heart attack. The market just had one, and now it's in recovery mode. Wilson believes we'll be stuck in a bumpy, sideways range for a while. No big gains until we know where the economy's really headed. So, for now, it's not a rocket ship. It's more like a roller coaster waiting for the next big turn. A crypto analyst known as Dave the Wave, the same guy who predicted the 2021 Bitcoin crash, says the worst might be behind us. He sees Bitcoin forming an inverse head and shoulders on the chart, which usually means a big bounce is coming. He expects BTC to rise near $89,000, dip to $77,000, and then shoot past $110,000. In his words, it's forming a great basing pattern, like the calm before the rocket launch. Even though the market feels shaky, he says that's just emotion talking. From a zoomed-out view, the chart looks like a normal correction, not a meltdown. So maybe it's time to stop panicking and start watching that chart like it's a treasure map.